Hello, everyone. Welcome to our Title Success powered by Bowe Digital webinar, Learn How to Sell Your Title Company. Thank you for your patience with us for starting late here. We had an issue getting our slides to load, but everything seems to be working now. Just a couple of, I hate when people use this phrase, but the housekeeping for this webinar. We are recording the webinar, so we will make sure to send you a copy of the recording within a couple of days of the webinar so that you have the slides and the wise words from Marcus and Pat here. Also, we have the ability to chat on this webinar. So if you have questions for these two gentlemen throughout the webinar, please feel free to use the chat box over on the right-hand side, and we will make sure that those questions get asked by Pat and Marcus. And I think that that's it. We have a variety of folks on the webinar today from the underwriter space as well as the agent space. We're going to try to give you both plenty to think about and know as we talk about what's happening in the mergers and acquisitions world right now. And so without further ado, I'll turn it over to my partners in all of this, Marcus Hunt and Patrick Smith.
Thanks, Wayne. Super excited about today's presentation and webinar. Always good to do these, and excited about everyone that we've got a part of today's session. And so hopefully everyone can get a little more information and take away from today's presentation and kind of some of the things we're going to talk about as we're planning kind of our fourth quarter webinar. We wanted to kind of get back to the basics of people wanting to, okay, towards the end of the year, people start thinking about, is it that time? What does the end of the year look like? Do I have goals for the coming year? And so we kind of want to do more of a nuts and bolts kind of presentation on, again, selling your title company. We do know, as Wayne was saying, we've got some underwriter friends that are on today. We got some companies and representatives of potential buyers. And then we've got some sellers we know that are joining us. And so hopefully, again, everyone can take away some great information. We'll even kind of speak to each kind of group, whether you're a underwriter, we've got some things coming for you to maybe help in the M&A space, but for our buyers that we work with, and of course, again, the seller. So we're going to kind of hit the highlights of kind of what we feel and what we're seeing in the M&A market. And then we'll talk about, just some of the assessing your company and what that looks like. And then kind of moving into the process of putting everything together and getting ready to sell, and then what happens after a sale. And so, Pat, let's dive into the current state of the M&A market.
Okay.
And so, we've seen, and we talk about this all the time, and we, the market continues, the ownership of title companies, the owners continue it, where none of us are getting younger. And so we're still, I think we're still in this 5-10 year window when we're going to see a lot of exit planning from ownership. And so what are you seeing? Just kind of a little update in kind of what we've been talking to owners and what your feel is.
I think what we're seeing is a shift toward a balance in the market in terms of buyers and sellers. Just as you mentioned, Marcus, whether we admit it or not, the owners of the typical title insurance agency are getting older. We don't see a lot of family members who are looking to move into those ownership and management positions. There's going to be a transition. I think for a while we were seeing more people looking to transition out than we had people looking to transition in. But now we are balancing that market with a growing number of, I will say, younger and a little bit more entrepreneurial minded prospective agency owners who are actively seeking acquisitions. So I think we're moving toward a balanced market. We're not quite yet seeing the numbers of sellers come into the space that we need necessarily to truly balance it. But I think as we go into, as you said, in through the fourth quarter, the busy season is wound down. It's that time of the year where we have to think about what do we do next year.
Right.
That I'm hopeful, and I'm thinking that we'll see a few more sellers come into the market and start exploring what that what that next chapter looks like.
Well, we were talking about it earlier too, that I think the sellers are there. They just haven't kind of bubbled to the top. And some of that is, you know, what we're trying to do from at a title success level of get the word out and try to connect people and try to, educate people on that there's a market, there's opportunities to transition and sell your company. But it's just getting that message out and trying to bring everyone together. And we'll talk about some of the ways we're trying
Sure.
to bring companies together.
Well, one of the things that we have heard is kind of like some people in the real estate market say, "Oh, I missed the high point of the market," right? And we've heard that from title agency owners. Well, I should have sold in 20 or 21 or maybe 2022 when the market was high. Well, the truth is, those are in the acquisition side of the market. They were never really taking 2021 as being a sustainable
Right.
pro forma into the future. They were always going to look at more historical financials. They were going to look at more projected pro formas based off of a more traditional or average type
market.
year.
Yeah. Mhm.
So if you own a title agency and you're thinking, I missed the boom, you really didn't, because you made a lot of money probably in 2020 and 2021 and into 2022. And now that we return to a little bit more of a traditional market, you've already recognized that
Some
income.
of those gains. Yeah.
Now we still have the opportunity to sell that title company on a traditional basis with multiples that we have grown accustomed to
Right.
before we saw the COVID and the post-COVID fallout.
I think that's a great point. And I think it's one that we've had to educate potential sellers on is like, you're just not going to be able to put the emphasis on those kind of boom years, and just understanding that, yeah, you took home probably some higher gains than you normally would, and that's great. We all did that. We were all kind of running wide open and had a lot of great success. But yes, kind of averaging that back out and getting to a more normal kind of revenue numbers.
Right.
Really is kind of what we're seeing. That's the message we're having to drive. That's what the buyers that we're talking to are looking at. Some people just throwing out those numbers. Some are kind of weighting them. Pat, I know we'll talk about valuations in a minute. You kind of do that when you kind of run through the valuation process.
Mm-hmm.
So I think that's a big piece. And just getting back to talking about sellers kind of bubbling to the top and finding those. For our underwriters that are on the webinar today, you guys, again, I kind of talked about this as we've met with underwriters, are really the grassroots boots on the ground, knowing who's out there in the field that's looking to sell or looking to transition. And so hopefully, again, our underwriter partners can help us kind of, again, we're trying to centralize kind of the process of connecting. And so hopefully our underwriter partners that are on can be a part of that connecting process with us at Title Success as we continue to grow.
One thing I would like to mention, you can't really have a discussion about the M&A market without talking about interest rates.
Right.
When we became active in this field, rates were for lending in this sphere, just like they were in the real estate market, historically and perhaps artificially low. And now we've seen a increase in interest rates back to, again, more of where we've seen rates historically. Sometimes sellers will say to me, well, we would have a hard time, I think, selling in this interest rate environment. But that's not true. People who want to grow their business are going to grow their business, and they will find a way to work within the current interest rate environment. What we have seen since interest rates have started to come back up a little bit is that buyers are looking to some different sources of funding. They are, instead of necessarily going straight to a commercial bank to do traditional financing or even SBA financing, they're looking and they're putting together investment pools of similarly minded people who have some cash that they can work with. And we are working with and encouraging sellers to be willing to be involved in the transaction after the close, to be able to stick around with a seller note, with an equity sort of interest or an equity earnout. And that can even be advantageous to the seller, because now you're collecting interest at more than you would be able to earn on your money.
Right.
And you might also have the opportunity to continue to share in the purchaser's success as they make some synergies and create some economies of scale in the operation of the agency. So don't be afraid to come into the game just because you think that you've missed the boom, or because you think that the interest rates are going to drive the sellers away or purchasers away, because neither of those things are happening.
Well, and you're right. And again, it's one of the things we kind of had to reset, the mindset of buyers and sellers, and how do we structure kind of in the current market. And we're seeing that, and it's not just in the M&A space in the title world, it's across the board. When Pat and I kind of work in other worlds in the M&A space, and kind of, get information in across the board. And so it's an industry, like M&A industry deal right now, where we're looking at creative ways to finance, or there's more emphasis on some seller funding pieces, or way to hold a note. Or
it's football season. So think about it this way. If you're a football coach and all of a sudden you sign a 5-star quarterback, a couple of 4-star offensive linemen, and some 5-star receivers, you're going to throw the ball because that's what you have available. If you don't have that, and you've got a great triple option quarterback, you've got a couple of great running backs and some good blockers, you're going to run the ball. You're going to move the ball down the field. You're going to get in the end zone either way. Use what you have available to make the deal work. And that's the same place we are now. We use what we have available to put the transaction together and make the transaction work for both the buyers and the sellers.
So as we kind of move forward, let's talk about, kind of overview of the market. Let's dive in a little bit into how to maximize the value for a company. So we've got a seller now that's looking to sell. No, they want to go down that road, do some planning strategy. So when we're talking about assessing the company and maximizing value, let's first dive into operations.
First of all, that's the first question we get, right?
Right.
Anytime somebody approaches us that may be considering selling their company, the very first thing they ask, and it's what everybody wants to know, what's my company worth? Well, we're lawyers. I'm an old accountant. So, the first thing we respond to is, it depends. Well, it depends on what? Well, it depends to some extent on what the market is doing, but I think it depends a lot more on what we're about to talk about.
Yeah. So I think there's a lot of value in, again, we'll talk about operations, and then we'll talk about people. And so let's dive into operations first. And one, we'll talk about how well the company is managed. And so is your company up to speed on technology? Are you using all the new latest tools when it comes to wire fraud protection? Again, the basic things at this point that most of us should know, that our underwriters are beating over our heads, that we should implement, and best practices. So, but we've seen, Pat, companies that have just been kind of hanging on by a shoestring for the past 5-7 years,
20 years,
or longer, and they're not up to speed. And so, yes, we all, and probably everybody on this webinar, may be at a place where you're up to date and everything, but there are plenty of companies that aren't. And so we have to build that into the value too.
And if your agency is owned by a lawyer, the chances are better that you're running 2-3 generations behind on your software and on your ability to take advantage of modern tools. And for some reason, lawyers just seem to have a harder time making those investments. They're kind of a big, if it's not broke, why fix it deal. I understand that it saves money, but there are some operational problems with that. There's also some valuation problems with that. So the first step is take a real good look at your current operations. Really, okay, it's been working good for 20 years, but how well have you embraced modern technology? How well have you prepared your agency to face the challenges that we're seeing every day, such as wire fraud, such as seller identity fraud? Challenges that we have to face, are you tackling those head on? Because that's going to make a difference to a purchaser as to how they're going to value the company that they're buying.
Yeah. And I mean, some of us, may have kind of patched along through the boom period. And so, I mean, we all know this window of time we're in right now has been a great time to reassess, kind of get our house back in order after, running really hard for several years. And so have you done that? And especially if you're looking towards a sale, make sure you've got all those pieces in place. And you can reach out. Our underwriters have great tools. Again, I know there's a lot online with us today. They have great tools to help kind of evaluate. There's our software vendors. We've talked about those in the past, Pat, that software has become so robust, so that touches so many pieces of the equation now.
So different than Shepherd's Blackacre.
Yeah. And so it's not just, doing a settlement statement. It is kind of the start to finish product. And so, a lot of times when we work with our software vendors, they can walk us through and see maybe the inefficiencies in our process and maybe things that we can clean up or become more efficient in. And so software vendors are great. And then, Title Success and other, independent consultants can come in and, work with your company to really be able to evaluate where your company stands as far as efficiencies. And so a lot of times, Pat, we go into a company and we'll do an overview and maybe recommend, like, okay, if we can do these certain things, we can increase the value by this amount, or what we feel like can add some value to the bottom line. And so some of that may be becoming more efficient and we don't need as much staff, or some may be adding other tools that can help us maybe generate more revenue. So
let me just chime in there where you're talking about value and how to, if you think that you may be interested in selling your company for whatever the reason may be, retirement, health issues, lack of ready-made succession, all the reasons. And that's a whole nother discussion that we can have another time. Is this when's it time?
Mm-hmm.
But if you are thinking that somewhere down the road, 1, 3, 4, 5 years, this is in your future, then today is the time to start looking at your company's operations as well as people and other things, to make sure that when it comes time to flip that switch and say, we're out here, if anybody's interested, let us know, you have increased the value of the company by making all of these pre-offering enhancements.
Right.
So if you think that this is something that's coming your way in the next 1, 2, 3, 4, 5 years, then start doing the things we're talking about today, so that you're adding value to the company.
Well, and I think buyers look at, maybe the, a seller that's actively trying to get better and do, put some things in place to be better. And so I think that's encouraging to even a buyer coming in, that
absolutely
this seller is, whether the past year you've worked on it, or just the ability to, like, okay, we've set some things in motion that are going to continue even after a purchase. That'll only benefit you as a seller, but also benefits the buyer as they come in. So they're just not having to start from scratch, implementing some tweaks and changes.
Let's go to the next slide.
Pat, and as we wrap up, let's talk about just compliance real quick, because we know that's a big piece when it comes to, if there's issues hiding kind of behind, in the closet somewhere that we need to dig up, it's better that we address them on the front end. And so whether it's best practice compliance, whether it's we've got some claims
fish files
issues out there, like, let's address them now, get them handled. Again, now's a good time to clean up stuff. And so that's just another piece I like to hit on, which, again, we all should know, but those are the ones we tend to just push over in the corner and hope they go away. But if we can address them now before we get down the road with a buyer, then we're in a much better place.
And two, when you go into a purchase and sales transaction and you're doing due diligence, you're doing sales agreements, as a seller, one of the things that you will do is to give representations and warranties to the buyer that there is a lack of these adverse type things percolating out there. So one of the things that we will want to do is to do sort of a self-examination and see what's there that we're going to be asked to provide representations and warranties that don't exist. Let's clean those up so that when it comes time to make those reps and warranties, we're making them with a clear heart. We know that there's not something that's going to come back and do a gotcha. I've worked on a transaction earlier this year. There's some gotchas that are coming back, and it's creating a lot of strain as part of the transition.
Yeah,
So,
and it's one of those deals like we can help walk through the due diligence process with a buyer, but if some of those things are hiding, you don't want to come back and even jeopardize the deal that you put in
correct.
place because there's something that wasn't disclosed or wasn't handled prior to the transaction being wrapped up. So, talking about other ways to maximize value, we all know this is a people business. From our staff to our clients, it's relationship and people driven. Let's start at the top. So, we talk about the owner. Pat, we meet with a lot of owners on a daily and weekly basis. We always kind of lead with the what do you want to do? What's your goals when it comes to moving forward? Do you want to completely exit the business? Do you want to just take a step back? Do you want to take some things off your plate? I feel like we got a lot of clients these days that are just tired of the HR, tired of the behind the scenes, tired of the management piece. And they just really want to dive back into serving clients or doing title. And so they're looking for a buyer just to come take over some of those pieces that are the back office stuff.
The compliance piece is huge. The HR piece we're hearing a lot. Benefits administration, the things that you have to do as a business owner that as a title person you just may not want to do anymore.
Right.
I mean, we've heard that over and over again. I just want to take one of the best words I just want to take my 40 files and go in a room and close the door and work them.
Right.
So,
and that's okay. And there's
fine.
there are a lot of buyers out there that actually love that idea. Like, that have a great system to implement that handles back office work. And maybe, again, we talked about structuring deals. Maybe it's, the current owner retains some ownership and just continues to work kind of on their files or on their business or work in the title world. And, the new partner buyer comes in and handles a lot of the behind the scenes stuff. So you got to know what you want to do whenever the time comes to step away. And again, that stepping away may be just stepping out of the, the chief role and rolling into more of a staff role, and that's good. And or it may be again riding off into the sunset and doing.
So we ask, what do you want to do?
Mm-hmm.
What do you want to do? What do you want? Do you want to go to the beach? Do you want to stick around and work? And we get both answers, and there's no wrong answer. It's just this is your novel to write.
Yeah.
So whatever you want to do.
But I think it's important because I think so many buyers, that's one of their, as much as the seller asks, what's my company worth? A lot of the buyers that we work with ask, what's the owner going to do after the transaction?
And the other thing that, and again, we'll talk about valuations, but when I am looking at financial statements to try to look at what the pro forma, what's the income of the company look like going forward, which is a very important component of some of the valuation methods that I like to employ. I look at the owner. I look, what's the owner doing?
Right.
What are they doing on a day-to-day basis? And if they're going to stick around, what would we have to pay the owner as a fair compensation for doing what they want to continue to do? If they want to get out completely, that's fine. What are we going to then have to pay somebody to do what the owner's doing?
Right.
So if you're sitting in that position, you're thinking about, well, we've talked about selling, or I've thought about it, I don't want to do. That's one of the important questions to ask is, what is your role now?
Right.
And what do you see that role being after acquisition? And that lets us work with you to properly construct those pro forma, forward-looking financial.
Well, and I think I've got some buyers that I'm working with right now that actually I think will pay more in a higher premium if they know the owner is going to stick around for maybe 1 or 2 or 3 years.
I agree with that.
If they know they've got to come in and there's kind of a void because the owner's literally stepping out day one, I think they put less value on a company that. So that doesn't mean you got to stay around if you don't want to, but I'm just there is some value to whether the owner is going to stick around for a period of time.
And, again, what we will want to do is to work with the buyers and sellers and take a look at what's the environment in the company. Is this a beloved owner who's been, everybody's father or mother figure for a long time, and everybody would love to see him or her stick around? Or is this, an owner where there's been some tension, there's been some problems, maybe employees are looking to transition elsewhere,
Right.
and with that, a lot of the value of your company. We will work with you to help structure the transition plan that will give the best chances of continued or increased success down the road.
Right. Let's jump into some other like key team members that I think it's valuable and very, very, very important to make sure we either lock down or make that we've got a plan for them or we've brought them along. So, Pat, one of the things we talk about, if the owner is going to step away, have you kind of replaced yourself in the day-to-day operations?
Right.
And so if you haven't, again, you just don't want this void when a new buyer comes in and you step away. So if you haven't already done that and you're looking to remove yourself from the day-to-day operation, you should be working on replacing yourself. And so whether that's whoever kind of your main team lead is or, next leader in the office, putting them in a role. Maybe you're giving them more responsibilities on a day-to-day basis over the next, few months or 6 months or a year, however long. But again, that window of time of you looking to exit. So I think that's important, and just identifying who those other key members are.
And I think look also is very important is within your team. Now, if it's a 1 or 2 person office, fine. If it's a 10 or 15 person office, maybe a little more complex. But who has the primary client contact?
Right.
Who, when a client looks to place an order, when a client has a question, when they've got a problem, when they're looking for advice, what's that primary contact? If the primary contact is the owner, then one of the things we would advise is to start integrating your other team members into those primary client contact roles. Because if you're the primary client contact and you step away and your customers don't know the people that they're now going to be dealing with, that's an opportunity for your competitors to come in and enhance those
Right.
relations and try to pull that business away. Same thing with your sales staff. Make sure that they have that primary client contact responsibility so that when you as the owner step away, there's not a void there.
Well, and you can even be proactive. We talked about this before about creating some incentives for key employees to stick around and stay through a transition. And so maybe you build into that. And a lot of our buyers talk about that. What can I do to incentivize people staying on board through a transition? And that may be some kind of bonus structure. That may be some kind of retention structure.
Golden handcuffs,
Right.
I've heard used before, which one of the things that we've actually utilized, and I've utilized in businesses other than the title industry, is like, we're going to, and you get a piece of the action, whether it's an actual ownership interest or a piece of the profits. But sometimes that is not necessarily payable to a little bit down the road.
Right.
So that if somebody leaves, they're leaving some money on the table.
Right. Yeah.
So I don't think we're going to see any Jimbo Fisher exit strategies
No.
where we're paying somebody $76 million to go away. If you get that deal, let me know. But making sure that those relationships with those key employees are solid. Non-compete agreements are increasingly growing in disfavor.
Right.
The Federal Trade Commission likely is to issue some rulemaking very soon that's going to essentially take non-compete agreements off the table unless it's in connection with a seller who's selling his business or her business. So I don't necessarily a big fan of that. I'm a big fan of the employee that is the least likely employee to leave you and go somewhere and try to take your clients as an employee who is comfortable, they're happy, they're secure
Right.
In their position. Employees, in my experience, don't necessarily leave over pay. Some do, a few, but they typically leave over a breakdown in the relationship with the management and ownership team. So we want to make sure that those employees are secure,
Right.
and comfortable in their positions.
Yeah. And I think that's the job of both the seller and the buyer. Seller as you transition out, and then the buyer as you're transitioning in. And sometimes we talk about it on some of our webinars and seminars we do, but just that culture mix and culture blending is super important. We're not going to dive into that too deep right now, but it's a job of both the buyer and the seller in these M&A transactions. Kind of the final piece, kind of in this section, again, financial condition of the company, maximizing value there. Again, sellers always want to know, what's my company worth? Some of the things that we always look for, again, make sure your financial records and financial statements are clean. And it makes it easy for a buyer to be able to get those and digest the information and start working through them. If your records are all over the place and scattered and not cleaned up, then it really, one, it delays the process. Two, it may frustrate a buyer that they just walk. And so, Pat, I know you deal with the numbers a whole lot. What do you see? What do you look for when you're getting financials?
But from having done this since I had hair, one of the things that I'll do when I get a set of financials is I start looking at ratios of salaries and compensation to revenue, overhead to revenue, certain expense items to revenue. I start looking at these ratios, and if any of them start to be particularly out of whack, I want to have a conversation about why that is. I mean, some of the things that we've seen is, marketing and sales expenses can be way out of proportion. Why is that? Well, we have tickets to the New York Jets games or whatever, and come to find out, these are really expenses that might be more considered benefit more of the owners, be personal business. We want to look at the statements, and I'm not saying anybody's doing anything wrong.
Well, but let's be honest, who would ever have New York Jets tickets?
Bad example, or even now Auburn, Alabama tickets,
right?
Something like that. But so what I asked the owners, I said, if you were to exit the company, are there expenses that you reasonably believe that the company would not continue to incur? We've seen very expensive automobile leases. We've seen racehorses. We've seen a lot boats. We've seen a lot of things that I'm not questioning why those are being expensed. Don't care, but a buyer will care.
Right.
So we want to take those and pull those expenses out of our historical data, because those are expenses that are not going to stick around.
Right. And it's for the seller's benefit, because at the end of the day, we're trying to get to the real number.
That's right.
So you want to be able to add that back in.
That's
so there's
exactly right.
a truer picture, and probably increases, again, what the bottom line looks like.
That's exactly, because you're ostensibly reducing your tax liability by expensing some of these things. Again, I'm not questioning whether that's appropriate, inappropriate, or whatever. That's between you and your law attorney and CPA. But what I'm saying is that by reducing your income, your reportable income, then you're also damaging the value of your company, because you're decreasing your cash flow, which is one mark that I use to do some modeling and some calculations, and you're reducing probably the stated multiple of earnings which your company may sell. So having financial statements that are truly representative of the operations of the company are very important to the valuation process. They're very important to the due diligence process, and ultimately they drive a higher valuation of your company.
And then just to wrap up this section, there's always, if there's claims and you're aware of them, being upfront with those,
potential claims.
Making sure those are either handled or addressed when it comes time to making a transition.
And this goes back to our earlier slide, where we talk about taking a look at your processes and your procedures within your company, and are they good? Are they well documented? If I'm looking at a financial statement and I see a file closing shortage number that's more than 0.5% or 0.75% of revenue, I'm going to start asking questions about what those file shortages look like. And if I see something a claim that's $75,000, $80,000 in a time period, I'm going to start asking, what was that?
Right.
And then once we've identified what that is, then I want to look and see how that shortage arose, or how that claim came to happen, to look and make sure that it's just something that, because in this business it happens.
Right.
But I want to make sure that that's not indicative of some sort of weakness in our processes and procedures.
Right.
So again, we want to see those things. We want to talk about them. And by talking about them and dealing with them head on, we can minimize any negative impact that may have when it's time to go and present the company to a prospective purchaser.
So moving on to the next section, we've got, we're talking through what your exit strategy looks like. Some of these things, and we'll kind of cruise through because I want to be mindful of everybody's time today. And again, appreciate everybody joining us. So we've hit some of these key questions again. For owners, what are the goals? If you got co-owners, you got someone that's going to maybe buy in. We've actually done several transactions recently and valuations recently that it was just some co-owners that were actually taking down one current owner's interest in
Correct.
the company.
Yep.
And so there's that. So there's a kind of more of an internal transaction that's going on. Are there other family members that, want to be involved in the company, as far from an ownership standpoint, and what does that look like? And then current employees. So just looking at the pool of possible buyers, those are some of the internal or more connected buyers. But let's talk about you kind of, again, working in the financial CPA world. What are some of the tax implications that first we'll talk with the seller, what a seller should consider?
Yeah. So the way that the sale of the company is structured is something we'll talk about a team of trusted advisors, but this is where you want to get in touch with your tax attorney, your CPA, and have the conversation about, if I sell my company for X, what am I going to owe in taxes, and when am I going to owe it? Because, one of the things that we've seen in some of the transactions we've done is, here's your wire transfer for your money. Thanks very much. I'm already in the Bahamas.
Right.
And it's an upfront amount of money. So you're going to bear that tax implication. You're going to pay all the taxes, capital gain taxes on that sale that year.
Right.
Whereas if we do something where we're doing a structured buyout or even an equity earnout, and that purchase price is going to be paid over time in installments, you can be able to treat that as an installment sale, so that you are you're paying a little bit of the taxes each year.
Yeah.
And in the tax planning world, there is this traditional belief that any tax deferral is beneficial. That we don't anticipate that income tax rates typically go back up, and historically since 1986 we've seen that. So just know that if you take all the money up front, you're probably going to bear the tax implication up front. If you are willing to be involved, or if you want to spread that liability over a period of time, let's say perhaps you've got some capital losses that you want to try to take advantage of, working with your tax planners to structure matching your gains up with losses, or can save you a tremendous amount of money.
Well, yeah, and I think that's so important. And sometimes we just kind of miss it in the midst of doing our sessions in these webinars. We honestly could probably have a whole, webinar about tax implications in the M&A in buying and selling your company, because there are so many different things to consider, and there's different strategies to kind of work through. And so instead of, as a seller, instead of just like banging your fist on the table like, I want all my money now, sit back, maybe talk to your tax planning advisors, your CPA, and really get a picture of, okay, if I sell and I've got this income coming to me from my sale, what's the best way to structure it so you're not giving away a large portion of it to the taxpayer.
If you've got built-in losses from your stock portfolio or built-in losses from other real estate investments, if you invested in commercial office space 5 or 6 years ago, as part of an overall tax minimization strategy, the sale of your title company, in which you're almost guaranteed to have a large capital gain, because your basis is almost guaranteed to be very small. If you have this large built-in capital gain, and you have other assets that you can use losses to offset those gains, you can minimize your total tax impact. Get those benefits now, and then going forward, you don't have to recognize that income then. So everybody's situation is different. Have a conversation. If you don't have a good tax planning person, if you'll contact us, we'll hook you up with somebody who is.
Yeah, and that leads right into our next slide of building that team of trusted advisors. Again, we'll just kind of hit the highlights here, but when you're going through this process, there's a lot of different moving parts. And it's important to have a lot of these key members on your team. So we've talked about a CPA and your tax advisor. You need a business attorney that's familiar with the business, laws in your state. So Pat and I are attorneys, and we kind of understand business law and work in that world. But we always get counsel from attorneys in the specific state we may be working with the client in, or again have their client go kind of bring in someone from their market to help with those business law legal questions. We talked about consulting firms. Title Success is truly one of those. There's several other that are specific to the title industry, which I think is awesome for our space to have some companies that you can lean on that are specific to working with title company owners. And so I think that's really important. Business brokers. We've actually started, that's one of the things I feel like I've seen more of in the past 6 months or so, that we've gotten more general business brokers that have had some title company deals where they've been representing title company owners that are looking to sell their business. That to me tells me, again, we talk about the sellers bubbling to the top. I feel like I've seen more business brokers having title companies in their portfolio. And so working with a business broker, we offer those services here at Title Success so we can broker your business, but there's also just general business brokers as well. And then just going down the list, real estate agents, if you've got property involved with, selling your building or your that your business is housed in.
And I want to talk about that for just a second. When we're valuing your business and we're coming up with a valuation for you, I'm valuing the business, the cash flow generated from title operations. I'm not valuing your real estate.
Right.
That's a separate transaction, and that's an add-on to whatever. If you own your real estate and you're selling the real estate, this is also part of your estate and tax planning. You may want to sell your business, but you may want to retain the real estate and lease it
back to the
purchaser. We've done transactions like that. So if you're going to, that may be an opportunity at part of the sale to tie that purchaser up in a fairly long-term lease. So you know that you have that annuitized income coming in the form of rent. And you've got the tax deductions in the form of depreciation. But that real estate value is separate and apart from the ongoing concern value of your title operations.
And kind of wrapping up this section, and we've got a lot of our underwriter friends that are on board and on this webinar. Our underwriters, again, are such a great strategic partner with us when it comes to going through the selling of our company. So whether it's them helping connect with a buyer, whether your underwriter helping connect with a consulting group, or just getting information about the market. I feel like our underwriters are kind of boots on the ground and really in the thick of things with us as title company owners. So if you're looking to transition, always reach out to our underwriters as well. Finally, let's kind of run into kind of one of the last sections. If you're ready to transition, and again, our time's running out. We got about 8 minutes left. We go through the valuation process, Pat. It's kind of the first step out of the gate because we need to know a number. We want to our sellers want to know what their company's worth so they can plan if they really want to sell. They want to know, okay, well, how much is it worth? So talk about just briefly your process there. I know we've talked about financials and stuff, but just the valuation process kind of in a nutshell.
Okay. I'll give you the 2-minute version. People always ask us, what is my company worth? And the answer to that is it's worth what somebody will pay you for it. You might say, well, it's special, or it's different, or it's unique. The specialness, the uniqueness will be reflected in your financial results, in your reputation in the industry. At the end of the day, at the end of the transaction, when we're sitting at a closing table, closing your transaction, your company's worth what somebody will pay you for. So what we seek to do in evaluation is to look at your company's operations, the things that we've talked about up until now. How modern is your systems and software? How well trained are your employees? How small are your loss runs? all of the things we've talked about. We look at your income. We clean up the income statement. We look at your cash flow, and from that, we look at what the market is going to do. And from those things, I make calculations. I've put together a kind of a Ouija board of valuation methodologies. And from that, I try to determine what is the most likely range of sales price that you can expect to receive in the marketplace. And I say it's a range because different prospective buyers will pay different prices for the same company,
Mm-hmm.
because you don't necessarily know what's motivating a buyer of your company. One buyer may be willing to pay you a price that would equate to 4 times your average earnings.
Mm-hmm.
Another buyer who has a particular synergy that they're trying to achieve in your location or in your market, they may be willing to pay 6 times your average earnings based on your cash flow. So we try to discern where we think prospective purchasers are more likely to come in, and we present you with a range of values, and we tell you where we would think we might see each of these range of values come into play. So it may be $4 to $6 million. Well, that's a pretty big range, but that's a range of where we could expect somebody to come in and say, well, I'll give you $4 million. Well, they might really give you 5, but there's range there for negotiation. So that valuation process is a little bit art, a little bit science, a little bit Ouija board.
Well, and as we flip through the next few slides, we're not going to hit each one of them, but as you go back, if you want to, dive into the slides, we kind of hit the bullet points of some of the things when we talk about valuations that we consider. There is a question in the chat box, and I'll read it real quick and we'll answer it. Is there a standard multiple of EBITDA that you see for valuations, one, and then, or a discount when buying out a partner that is not active in the business, or does that not bring in, or that does not bring in revenue? So, Pat, what do you think?
There is no standard EBITDA,
right?
Because there is no standard title company.
Yeah.
Sometimes you'll hear people say, well, maybe 3 to 5 times EBITDA, and then we'll find a company that was 7, or we'll hear 3 to 5 times EBITDA, and we'll look at a company that's like, there's no way this is more than 2.25,
right?
Based on the cash flow. So the short answer to that is no, there's no standard. There is a range in which we see most of our transactions fall. 4 to 7, maybe 3 to 5 sometimes. But we're not pricing your company based on EBITDA. We're not calculating your EBITDA and saying 3, 4, or 5x. What we're doing is we are valuing your company based upon the present value of your future cash flows.
Mm-hmm.
So we're looking at discount, weighted average cost of capital, anticipated growth rates, other matters that will either decrease or increase revenue in the future. We're arriving at a value and then a range of values, and then we state that range of values as a multiple of the company's EBITDA. So,
right. And we've seen everything. Yeah, we've seen everything from, again, I've seen basically the keys handed over to an office, and there really was not much value, and it really was to protect the current employees, and maybe there was some ongoing revenue given to the previous owner because the company was in a place where the owner needed to exit. Mm-hmm. And then we've seen everything from 3 to 4 to 5 times. But you're right. There's so many factors that go into that number. It truly is. Every deal is unique. We talk about that. And then even the deal that's unique is unique to each buyer because, again, what a buyer is willing to pay affects that as well. Moving on. So
we got the one about discount when buying out a partner.
Well, and I'll just talk about that real quick because we've had a couple of those. So I think there is okay, what is the true, kind of number that the company revenues that the company is generating? So I think like we talk about, we can come up with a range number. I think if you've got an owner that doesn't contribute or is not tied to revenue generation or anything like that, so then maybe that starts pulling it back.
Yeah.
Of that range. So say we do evaluation, come in, and we've got your company's worth, between 2.5 and 3.5 million dollars. And so maybe if you've got an owner that's not contributing or not involved in the day to day, maybe you tend to be on the lower end of that scale.
And another thing is, how much does that of the company does that owner
Right.
own? If you've got a 5, 10, 15% owner, then you'll typically see a small minority owner discount.
Right.
But if this is somebody that is majority owner of the company or manages to control the company, you're going to have to pay a premium.
Yeah.
Even if they're not working in the business every day, if you're
taking down
you're taking it out enough that is now gives you control,
yeah,
then you're probably looking at paying a control premium.
That's right. So we'll flip. So you see the agreements. We a lot of times when we go through this presentation, we hit on kind of just the agreements that are entered into. So, and then finally, as we just wrap up here, because we are at time, how can Title Success help? And that's one of the things that we love about what we do, coming alongside our partners and clients and really helping them through the process. And so we've talked about valuation services. We've talked about exit planning strategies and consulting that we do for sellers. We'll come in and either help figure out some things that you can do to create more value in your company, or just put that plan in place. Whether it's I got a 6-month window, I got a year window, or a 5-year window, we can help put that piece together. We are one of the things we're talking about, finding a buyer for our sellers. One of the things I'm most excited about, Pat, and we've got coming. We announced it, kind of hinted at it at Alta this year. We are getting really close to launching the title industry's first business listing website that will be kind of, again, the central hub for companies to list their company for sale. There will be obviously levels of viewing information. So we're protecting kind of the data and who it is that's selling, and making those buyers that are interested sign non-disclosures. But it will be the first hub of its kind in our industry to be able to have buyers come and look from across the country of title companies that are for sale. And I say all that, like, I think one of our biggest connectors in that will be our underwriter partners, and that will be able to help us push those selling title companies to this listing site. And so we're extremely excited about that. And then we talked about, Pat, and just briefly, we're creating some underwriter M&A strategies. So I know we've got underwriters on the webinar today, but for you guys that are on, feel free to reach out to us or Wayne. If you'd like to be a part of some of these strategies, we're creating content specifically for you as an underwriter, so you can send out to your title companies and agencies that are out there that are looking for information and how to help. And so we're super excited about the things that are kind of in the works that are coming, because we feel like one of the best ways we can serve those companies looking to sell is partnered with our underwriters.
So kind of wrap that up.
Yeah.
State of the M&A business in the title world right now is still very active.
Very active.
We've got a lot of acquisition money that is available. They're looking for a place to acquire, actively looking, and it's not necessarily geographically limited. We've got a lot of interest in Florida and Texas, of course, Sun Belt. But we've also got interest in New England. We've got interest in the Midwest. Some interest on the West Coast. So if you're in that kind of purgatory of do I want to sell my business or do I not? Give us a call and let us talk to you and give you some feedback about where you are and whether or not we have people actively looking in that marketplace, and see if we can start to go down that road with you to help you make that transition.
Yeah.
The interest rate environment has changed the way we structure deals, but I don't think that is necessarily scaring off deals. It's just we're being a little bit more creative, and we're doing some more non-traditional things,
Right.
but they're things that benefit the buyer and the seller. Look at your business. Really, whether you're looking to sell or not, look at your business. Take a look at your role. Take a look at how well it's managed. Take a look at your the big phrase is technology stack.
Yeah.
Like pancakes. Take a look at how well your technology matches up with what the state of the art is in that area.
Yeah.
And then start to think about, if I'm going to go down this road, who can I work with
Right.
that has my best interest in mind and who will help me achieve a successful transaction. When you go through that list, we hope that you will take the time to include Title Success in that list, to reach out to us, give us a phone call, and let us talk with you about how we can benefit your efforts in transitioning your company from where you are now to that next chapter in your company's life and in your life.
Yeah. And our contact info is on the slide here. And Wayne, we'll hand it back to you. Thank you again for being a part of today.
Of course. Thank you guys. Thanks everybody for attending. Like I said at the beginning, we will have a recording of this that gets sent out in the next couple of days here for you that will include the all of our comments and the video and the slide deck itself. So please don't hesitate to reach out to us at any of our emails for information on this or anything else that we talked about today. If you want to do individual conversations with some of your agents, we're open to that. We sign lots of NDAs all the time for any of the agents on the phone that want to have really specific conversations as well. So we appreciate everyone joining today, and we hope you have a great rest of your week. Bye-bye now.